Today we'll be discussing if and when beneficiaries of a trust might have to pay taxes on distributions. Trust me, the government always finds a way to collect their share. My name is Andrew Bethel. Hit the like button and let's dive right in. First up, there are several types of trusts out there, such as simple trusts, complex trusts, grantor trust, and more. We'll focus on simple and complex trusts today, but don't worry, we'll briefly touch on some of the other types as well. Now let's get down to the complex world of simple and complex trusts. But first, a quick primer. Simple trusts require all income generated by the trust to be distributed annually, while complex trusts have more flexibility and can retain or distribute income and principal. Principal being the assets in the trust, while income is what's generated from that principal. As for taxes, in a simple trust, the beneficiaries pay taxes on their share of the income. The trust itself is usually off the hook, but with complex trusts, the trust may pay taxes on retained income, while the beneficiaries are responsible for taxes on the income that they actually receive. Pretty straightforward. Beneficiaries pay taxes on distributions of trust-generated income, while the trust pays taxes on trust-generated income that is not distributed to the beneficiaries at the end of the year. For complex trust, the trust itself files IRS Form 1041, and the beneficiaries receive a Schedule K-1 to report their share of the distributed income on their personal tax returns. Because that's what everyone loves, tax forms and schedules. Now, about tax rates. Federally, trust income is taxed at a different rate than individual income. For 2023, the top federal tax rate for trust is 37% on income over $13,450. Not that much potentially. As for California, the same income level, the tax rate, will be about 9.3%. It'll be much more for income over $1 million, but it's pretty rare we're in a situation where that kind of income is coming into a trust and not being distributed out right away. Always check for the latest tax rates as they do change over time. And I know what you might be thinking. What about assets like IRAs in a trust? Are they taxable too? Well, it's a fantastic question and definitely a topic for another video, but let me just say this. Certain assets can indeed trigger a taxable event. So drop a comment below if you want me to do a deep dive into taxes on retirement accounts like IRAs and whether passing them through a trust impacts the potential taxes to be owed. So there you have it. When it comes to taxes and trust distributions, the government always finds a way to collect their share. Whether it's simple, complex, or somewhere in between, you can be sure Uncle Sam will be knocking on your door one way or another. And if you want some more numbers in your life, then check out our estate planning rundown for 2023, where I go over all the tax numbers you need to know for 2023 and beyond, including something I didn't discuss today, estate and inheritance taxes. Or you can check out our video from last week. Be sure to hit that subscribe button or ring the bell on your way out, and I'll see you next time.